Hello and welcome. I'm Martin Turner, Head of Policy and Public Affairs at the BIA, and today I'm your chair for this webinar on the UK's national security and investment regime. This new regime is currently being legislated for in the Houses of Parliament, and the systems are being set up in Whitehall as we speak. The BIA believes that the new regime could have a significant impact on the UK life sciences sector, and as such, late last year, we established a priority work stream to work with government to ensure that the new regime would be business friendly and to support our members and the wider life sciences community to help them get to grips with the new rules. This webinar is part of that, and today you'll hear an up-to-date briefing from the government alongside an impact analysis from our legal experts. We're also going to ask you as our audience to participate, first by responding to a couple of polls that we're going to ask you, and second by getting involved in the discussion by using the Q&A box on the right-hand side of your screen to ask questions or make comments as we go through this webinar. I'm going to ask you the first poll in 1 second, but to give you time to think about your answer, I'll give you the poll now, the poll question now, and then I'll introduce our speakers and then we will ask for your answers. So the question is, what impact will the new NSI regime have on the UK life sciences sector? Do you think it will have a positive impact, a negative impact, little or no impact, or you don't know? So 4 answers there. So whilst you think about that, I will introduce our guest for today. So with us, we're very pleased to have Sarah McIntosh, who is the Deputy Director of National Security and Investment in the Business Department. She is currently leading a team to develop the policy and legislation for the new investment screening process. James Marshall is a partner at Covington's London office with extensive experience in all aspects of EU and UK competition law and sector regulation. He is a member of the firm's dedicated FDI team, working directly on the UK's area of expertise. Jonathan Wakely is a senior associate at Covington based in Washington, DC. He practices at the intersection of national security and the private sector, advising clients on a range of issues, including cross-border investment, national security and public policy matters. He regularly represents clients before the Committee on Foreign Investment in the United States, CFIUS, which you're all going to hear about a little later when we speak to him. Finally, Eric Johnson is Policy and Public Affairs Manager at the BIA. He runs our Engineering, Biology and Genomics Advisory Committees, both of which represent part of our sector that are likely to be a focus of scrutiny under the new regime. He has been leading on our work on this bill and wrote our submission to the consultation on sector definitions. Again, we'll hear about that when he speaks. So thank you all for joining me. I'm going to ask that poll question now. So let me work that. So the question is, what impact do you think the NSI regime will have on the life sciences sector based on your current understanding? You can start selecting whether you think it's going to have a positive impact, negative impact, little or no impact, or you don't know at the moment. So we're seeing the results come in. All right, over 70% have voted. I'm going to close it in 5 seconds. Okay, there we go. And I'm going to share the results. So 41% say negative impact, 3% a positive impact, 53% don't know, and only 2% think it will have little or no impact. So fairly pessimistic so far, but a lot of people unsure. So hopefully this webinar is going to help you make up your mind on whether it's a good, bad thing or an ineffectual thing. So introducing Sarah now. Sarah's going to present on the government's approach to this, why it's happening, and how it's going to happen. I'll ask James, Jonathan, and Eric to turn off their cameras whilst Sarah's presenting, and then we'll all come back in afterwards and have a discussion. Please do use the Q&A box to ask questions throughout, and I'll probably hold most of those until the end. So, Sarah, thank you for joining us, and over to you.
Good afternoon, everyone. Thanks for attending today and listening to me. Could we move to my next slide, please? Thank you. So just wanted to talk a little bit about why we're doing this. So our existing powers to screen investment for national security concerns are currently provided for under the Enterprise Act 2002. The Enterprise Act governs our competition regime and provides the Competition and Markets Authority the ability to intervene into mergers and acquisitions on competition grounds. In addition to those powers, the Enterprise Act also provides for powers for public interest interventions. Public interest interventions allow the government to intervene, investigate and impose mitigations on mergers that raise national security concerns, media plurality concerns, financial stability and combating a public health emergency. So essentially it's a competition regime with a few kind of specific public interest tests bolted onto it. Whilst the regime has been adequate in the past, it has quite arbitrary thresholds that are much more appropriate for competition cases and not particularly useful for national security cases. So that means in the majority of sectors, we can only look at mergers and acquisitions when the acquired business has a turnover of 70 million or a share of supply of 25%. Over the years, we have made a few changes to that legislation, including lowering the thresholds for 6 specific sensitive sectors, but continued tweaks are not really the best way to kind of deal with the changing economy and emerging threats. Since the introduction of the Enterprise Act, technology has advanced and so has the cunning of the investors with nefarious intentions. The geopolitical climate has also changed and many of our allies have responded by strengthening their own regimes. COVID has brought into sharp focus the need for us to ensure we have investment screening powers which are flexible and proportionate. Businesses need to have the ability to seek investment whilst knowing the government will only step in if absolutely necessary. And that's why we've introduced the National Security and Investment Bill. Can I go to my next slide, please? So you'll see on the screen kind of few headline pointers around the bill. We first consulted on the bill in 2017 and then again in 2018. And then we had a couple of changes in government and a very busy parliament, which meant that we didn't introduce the bill until November 2020. So a couple of headlines to start. First thing, this is about national security. It's not about a wider public or economic interest considerations, so very narrow focused. The bill removes the national security limb of the public interest test under the Enterprise Act. So this is now a standalone regime, and it's totally country agnostic. The bill provisions for mandatory notification of some entity transactions in 17 sectors. Mandating notification will ensure that the government is automatically informed of potential transactions in these crucial areas and able to take action accordingly to investigate and mitigate any national security concerns. The obligation to notify is placed on the acquirer. Acquirers will be able to notify the government about their transaction early on in the transaction progress through an efficient, user-friendly digital portal. You'll be aware that we consulted on the definitions of those 17 sectors, one of which was engineering biology. The consultation closed on the 6th of January, and as a result of the responses, we refined the definitions. We're expecting to publish the response to the consultation in March, but I must stress that when we do respond, they are not the final definitions that will be going into legislation. Some of them are pretty far advanced now. We're pretty happy with them, such as the nuclear sector or energy sector, where we've taken those definitions from other parts of legislation anyway. And some others still need some further work, including the engineering biology definition. And once we publish our response, we will be working closely with the sectors to finalise the definitions ready for legislation. You may wonder why we're deciding to publish a consultation at this juncture, and that's because partially to sort of take us into the next phase of targeted consultation, and partially to help in parliamentary passage so that parliamentarians know the direction that we're travelling in on the definitions. Once the definitions are finalised, they will be set out in secondary legislation, and they can be amended in the future as necessary to respond to emerging national security threats, and also to respond to, changes in our economy where things are no longer a threat. The government has also retained a power to proactively examine any transaction across the wider economy that may present national security risks, even where notification is not mandatory. This will include, for the first time, the ability to scrutinise the acquisition of sensitive assets, such as intellectual property. And to be clear, any asset acquisition, regardless of whether it falls into one of the 17 mandatory sectors, is only a voluntary requirement. We're not expecting to intervene in many asset transactions at all. So, yeah, and then more information on how we expect to use the call-in power is set out in the Statement of Policy Intent, and a draft of that is on our website. The bill also sets out statutory timelines for our response, so investors will know in 30 days or less if the government is interested in the transaction. If there is a reasonable suspicion that the transaction may raise national security concerns and needs to be called in, the government has a further 30 working days to investigate. This timeline is extendable, but there's a much higher legal test for us to pass before we can extend the timeline, which I hope will provide some reassurance that we're not just going to extend it because we haven't reviewed it in time. So this brings me on to the timing for the commencement of the regime. The bill is about to enter into Lords Committee stage, and the passage of the bill is subject still to parliamentary time. But I currently estimate, and I have to say this is my best guess at this stage, that the bill might get royal assent in May. But prior to commencement of the bill, we need to lay several pieces of secondary legislation, again, all subject to parliamentary time. So at the moment, my best expectation, and it really is only an expectation at this stage, is that commencement will occur sometime in autumn. But we will give plenty of notice before commencing the regime. The regime will be operated by a new unit called the Investment Security Unit. The unit will be appropriately resourced, and whilst the main hub of the unit will sit in Bays, the officials will work closely with sector and national security experts right across government to ensure deals are processed within the statutory timelines. Investors and businesses will be able to contact the unit for advice and informal guidance prior to submitting the notification. We've had a lot of feedback from stakeholders to suggest that we've underestimated the amount of notifications we will get a year, and actually we'll get a lot of precautionary notifications. And we've really taken that feedback on board to ensure that we have enough people to be able to process everything. The regime itself is pretty similar to many of our allies' regimes, so we think a lot of investors will already be familiar with navigating this type of legislation. Furthermore, we've also worked really closely with our allies to ensure that we've learnt lessons and best practice for the regime. So that concludes my very brief overview of the bill. Further information can be found on our website, and over the next few months we'll continue to refine the guidance that supports this bill to make sure it's as easy as possible for people to comply. Thank you.
Thank you, Sarah. That's really good overview. Thank you very much. We had one question in, pretty fundamental question, asking what is the definition of a national security interest?
So this has come up quite a lot in parliamentary passage so far. So it's a great question. So we've never actually defined in legislation the definition of national security. We haven't done that under the Enterprise Act. We haven't done that in many other of the legislative forms that we have that refer to national security. And we've done that deliberately. It's a government sort of position to not to define it because it changes so much. I mean, I don't think this time, sort of last year or the year before, we would have thought a pandemic might have been quite so important to our national security sort of, you know. So we've always kept it flexible. But what we are doing is providing a supporting statement that talks much more about the types and gives examples and talks about the types of things that may constitute a national security risk.
And that's the statement of policy intent, or is that separate from that?
That's the statement, yes.
Yes.
Yeah.
And that will be updated reasonably regularly, particularly if a new government came in. They would provide their own viewpoint of what a national security interest would be.
That's right, yes. The legislation says that we need to update it at least once every 5 years, but we can do it more frequently than that if needed.
Great, thank you. Let's bring in Jonathan, James and Eric and start discussing what this impact, what the impact of this might be. So James, if I can turn to you first. You know, our poll showed that about half of people think this is going to have a negative impact on our sector, another half are reasonably undecided at this point. Now you've got a much more nuanced view of this and have been looking at it carefully. So what do you think the impact of the regime as outlined by Sarah will be?
Yeah, thanks a lot, Martin, and thank you, Sarah, for the really good overview of the new framework. So Sarah made the point that this is replacing the existing Enterprise Act regime, and I think what we're seeing is that this, you know, the NSI regime is going to be a really extensive reform package. It's going to introduce for the first time an obligation to have a mandatory notification for acquisitions that fall within the scope of it. It's going to be suspensory as well, which is new for this country. It's a departure from the existing more familiar regulatory screening around merger control that probably many of the people in the industry and many investors and people on this call will be aware of. So it really is a significant shift. And Sarah's explained the reasons why that's happening, and it's important to note that although it is a really material change, it's not happening in isolation. There's other jurisdictions across Europe, there's other jurisdictions globally where similar changes, similar reforms are being introduced, and existing regimes are being extended as well. What I think is challenging, or going to be challenging about this, I sort of think about it in terms of three categories, if you like. There's the impact that this will have on deal certainty. So if you think about being an investor, you're looking to buy some equity in a business, you're looking to put some funding in a way that would give you material influence, let's say, over the business, and so bring you within the scope of the regime. What does this actually mean in terms of your ability to be certain that you will get the deal through? So that's, I think, inevitably going to lead to increased levels of diligence at the beginning of these processes, and it will feed in as well to the kind of the plumbing of these transactions in terms of sufficient coverage in the SPA, for example, sufficient protection to cover off the risk of the regulatory review going in a direction that is not anticipated, for example. So I think the deal certainty point is going to be really quite significant, and I think until we get some precedent around how this is actually going to be sort of administered and reviewed in real life, then it will be potentially quite difficult for people to be certain as to what the outcome is. That feeds into the sort of second point, really, which is around the volume of notifications. And Sarah made the point that the government's initial estimates of notifications might well be on the low side. So I think the number was something like 1,800 notifications expected annually, both on a mandatory and a voluntary basis. And again, given this is such a new regime, given that it's such a big departure for the UK in particular, we are expecting to see quite a number of notifications, actually, particularly in, when you get cases where there's either some overlap in the sectors, or there's some lack of clarity as to whether or not how far in a sector you are or you're not. And and therefore whether you're in the mandatory regime or the voluntary regime. So I suspect there'll be quite a lot of notification, and it is really encouraging to hear that the ISU is preparing for that and will be adequately resourced. I think the timeline is helpful in the sense that it's 30 working days for the first review, where I guess we need to just watch how it plays out in practice is because the ISU will essentially, I think, have the ability to say, yes, your notification is complete, and therefore to start that 30-day clock. It would just be really important to make sure that kind of pre-notification timeline doesn't get longer and longer and longer in order to manage the flow of notifications into the ISU. So that's something that obviously investors will be looking at carefully. And then the third impact, really, the third sort of category of impact is around timing. And if you look particularly at, let's say, early stage life sciences businesses, often you need money in, you need investment in on quite tight timelines. So the ability for investors to get certainty, to get the clearances that they need, to get the sort of regulatory pathway through this in order to make sure that they're meeting the timelines necessary for the company is going to be a really important piece of this as well. So again, I think it all comes back to the fact that it's good to have clarity on time and good to have reassurances on the ability of the ISU to get through the notifications properly and in a targeted way. And it will be a particularly interesting first 12 months, I expect, as we sort of see how the regime starts to settle down.
Yeah, absolutely. Thank you. So, I mean, as you said, it is quite a significant departure from what companies and investors are used to at the moment. I mean, what are you advising clients to do in light of this coming in at the moment?
Yeah, well, there's two key points here, really. One is that generally speaking, as with merger control, as with other regulatory filings that you will be thinking about when you're doing an M&A transaction or when you're doing an equity investment or something, it's important to get these things on the radar and consider them early and do the diligence properly and do the risk assessment properly so that you can be confident that A, you'll meet the timeline you need to meet, and B, that you've identified any substantive issues and you can deal with them. That's the kind of overarching point for when the regime comes into force and just generally doing these sorts of transactions. The other point that is quite unusual about this piece of legislation is that the bill has got some element of retrospectivity, which means that deals that have closed from 12th of November last year until the point at which the NSI bill goes into law, those can be still retrospectively reviewed by the ISU once the bill has come into force. So there is that sort of risk, I suppose, for people who have done transactions, closed transactions before the bills come into force, but after the 12th of November 2020, the risk that they could still have questions asked about the transaction. And so in those sorts of circumstances, there's options to make a sort of an informal approach to the ISU, and I know that the unit is kind of up and running, as it were, and available for those sorts of approaches. So again, that's another way in which we're helping clients to sort of get through and work out the practicalities of this. And then the third point I'd just make is when if you're doing a deal and you might have signed, let's say at the end of January, and your deal is likely to close around the third quarter or maybe even the fourth quarter of this year, there's therefore a risk that you could end up getting quite close to closing, but the day before, for argument's sake, the NSI bill comes into force, and then all of a sudden you've got a mandatory filing. So having to, thinking through that risk and thinking through how you protect from that risk on a sort of contractual basis is also something that we've been working with our clients to do as well.
Thank you. So Sarah, is your unit kind of open for business for these for companies that are going through transactions at the moment and are worried about that retrospective call in?
It is. So the ISU itself is still very much a work in progress. You know, we're recruiting at the moment. We already have a director in place and quite a few of the staff, but we're continuing our recruitment processes, etc. But you know, people may have already experienced this that have contacted us. You know, you'll either talk to myself or one of my team who knows the bill very well, or one of the caseworkers that's already in place. But yeah, we have been fielding calls already.
That's great to hear, thank you. So James, one last question for you. Do you think there's any kind of major areas of major issues that are left unanswered at the moment about what Sarah's outlined and what's in the legislation? You know, as Sarah says, there are more documents coming down the line soon, so that's positive. Are there any big issues for you that you think still need to be addressed?
Yeah, well, Sarah's made the good point that the sector definitions is still being finalised, or the response rather to the consultation is being finalised, and the final definitions will still be a work in progress. And I think that's going to be absolutely critical, because for your members, things like the definition of engineering biology is going to be so important to determine whether or not they were in the mandatory regime, and then if they're not in the mandatory regime, then maybe there's some element of sensitivity, which means that it's sensible to make a voluntary notification. So the sector definitions piece is one. I think the second area that it would be helpful to have maybe a little bit more weight behind it is the statement of policy intent. So at the moment, it's a relatively short document, and it does, you know, it does set out the basis on which the government is expecting to identify potential concerns, and therefore to act on those potential concerns and review and call in transactions. But additional clarity on the way in which that's expected to operate, even to the extent it could be done on a sort of sector by sector basis, I think would be quite useful. And then the other area that we've had a lot of conversations with clients about, actually, interestingly, is that there is an ability under section 6(5) of the bill for an exemption order to be introduced, and that could be, exempting individual investors or group or certain types of investors or certain types of investment, for example. And I know from previous conversations, the government is not wanting to introduce any exemptions at the moment, just wants to sort of see how things go before making a decision on how to apply that. But it would be, there's lots of interest in that, so I think it would just be really interesting to hear if there's any more thoughts on that particular option and how that might be used in the future.
Yeah, okay, thank you. I mean, certainly it is generating an awful lot of interest. As you said, the definition of engineering biology is a concern, has raised the eyebrows of many of our members, and Eric has been talking to them. He runs our engineering biology committee, obviously a hot topic in that committee. So Eric, what have you been hearing from our members?
Yeah, well, Martin, most members are quite concerned about the bill, perhaps as our poll at the beginning showed. And a common reaction is questioning whether the regime is only about protecting national security, or whether it's also an attempt by the government to keep R&D jobs in the UK. So it's good to hear Sarah confirm earlier that the purpose is only the former, and that they'll take a strict national security remit. Aside from that, there are really three main concerns. The first one is that the regime will introduce a high level of red tape on the sector, which would be particularly unwelcome, because this would come at a time when the government's promise of less red tape post-Brexit has really turned into the opposite. And many feel that more red tape would also undermine the government's ambition to make the UK a science superpower. A second common concern I hear is that the regime would disproportionately affect biotech startups and SMEs, which, as mentioned, go through several successive funding rounds due to long R&D timelines. And we expect that many of these funding rounds will at least trigger the lower thresholds of the mandatory regime, because many companies are pre-revenue, and as James said, has limited cash runways. The concern is that any delay to an investment deal could risk the future of the whole company. And then finally, the third main concern we hear is that the UK will become a less attractive place globally to invest in life sciences companies. And as we know, the UK biotech sector relies heavily on global investment. And last year we had a record-breaking year of financing, and much of that came from overseas, including the US. But we've also seen an increased interest from China in recent years. So there's a lot of concern that the regime would put the sector, the UK, on the back foot compared to many other countries.
Thanks.
But it's also worth pointing out that many of these concerns are reinforced by general uncertainty about how the regime will work in practice, which we also saw when we asked the audience earlier.
Yeah. Great, thank you. And as Sarah said, there's been one consultation on the sector definitions. We're going to see an evolution of that. But what did the BIA put into its consultation response after speaking to members?
Yeah, so Sarah mentioned engineering biology, which we commented on, but we also commented on AI, because both these technology areas are used extensively in the life sciences sector. And our comments on both definitions were quite similar, in fact, because both are platform technologies and maybe not sectors in their own right. But the key point was that the definitions were extremely broad, and we believe they would capture pretty much all of the life sciences sector, which is a concern because the vast majority of the companies in the sector are developing technologies that have no implications for national security. And James also mentioned the volume of deals that BEIS would have to review, which we also gave a sense of in our response. So for example, over the last 3 years, there has been an average of just over 800 deals per year in AI. So if BEIS has to review each of these deals, that's 15 deals a week. And that's for AI alone. If we add the other 16 sectors to this, BEIS would potentially have to review hundreds of deals a week. So because of this, we suggested some ways the definitions could be narrowed down. And of course, it's really good to hear that Sarah is saying that BEIS is publishing the refined definitions, and we look forward to engaging with those. But regardless what definitions are used, the implementation of the regime is critical. So we welcome the expansion of the team as well, because they need to be well staffed with a deep understanding of the technology areas so that they can review the deals rapidly and minimize the impact on the economy.
Yeah, and we've actually had a question in about the sector definitions, Sarah. Someone asking the critical suppliers to the emergency services in the government. That definition, that's obviously very broad, because no one knows what the emergency would be. But that could obviously include life sciences companies, presumably during a pandemic or something like that.
I mean, potentially, but we are, as I've mentioned, the consultation is not the final definitions. The whole point of consulting was to narrow these definitions down, and we've done some of that. We haven't done it all yet. We need further help, but certainly, we are looking to narrow these down, and in most circumstances, there won't be national security risks. Of course, I should also point out that under the Enterprise Act, we do have powers to combat and mitigate a public health emergency test as well.
Yeah, so it already existed in a sense anyway. Thank you. As Sarah said, there's regimes like this across the world, and a lot of countries, if they haven't been running them for a number of years, are establishing them as we speak. But the US has had one in operation for a while, called CFIUS. And that is why we invited Jonathan from Covington's office in Washington, DC, to tell us about that, because I think it's quite an interesting system to see what impact it's had and how it's operated. So, Jonathan, thank you for joining us. Could you briefly outline how CFIUS works, and then the process that investors must go through?
Sure. Thanks, Martin. Glad to, and thanks everyone for joining this discussion. As Sarah went through her description of the new UK regime, it sounded very familiar. It's similar in many respects to the regime we have here in the United States, and I suspect that may not be a coincidence in some respects. So CFIUS is the principal national security regulator in the United States. It's an interagency committee of the executive branch chaired by the Treasury Department, but involving 9 other voting member agencies, including, for example, the Departments of Defense, Justice, Homeland Security, and others. And the committee has statutory authority to review certain transactions to determine whether they threaten to impair the national security of the United States. If CFIUS identifies any national security concerns, the committee has the authority to impose measures to mitigate any risks that it identifies. And if it cannot mitigate those risks, it can refer the matter to the president. And the president has the authority under law to prohibit a transaction, or if the transaction is closed already, to order a divestiture. It sounds like similar to the new UK regime, most transactions are filed voluntarily with CFIUS. And the way it works is if you file voluntarily, you get a legal safe harbor so the government cannot later come back and interfere with your transaction. By contrast, if you don't file, there's no statute of limitations, and the committee can review any transaction subject to authority at any time. And in fact, CFIUS now is using that authority pretty aggressively to go back and review transactions that have closed even a decade ago now. There is now, though, a new category of transactions for which filing is mandatory, subject to civil penalties if you don't comply. Securing CFIUS approval for a transaction can take anywhere from 2 to 5 months, depending on the nature of the transaction, the investor, and the form of filing that the parties choose. And the committee really does undertake a very comprehensive review of the investor, of the US business, and finally the potential consequences to national security of the transaction.
Martin, I think you're muted.
Apologies. So yeah, 5 months for a decision, that's quite a long time. Has CFIUS impacted biotech investments in the US, in your experience?
Sure, it's a good question. Let me start. CFIUS has been around for decades now, so let me start briefly by sort of describing what's changed in the last few years, because there have been some important changes that have implicated biotech investments. Fundamentally, there have been 2 changes. First, we have, as I mentioned now, a category of transactions that are subject to mandatory filings, and some of those can implicate investments in the biotech sector. The second is we now have expanded jurisdiction. Previously, foreign parties had to acquire control of a US business to trigger CFIUS jurisdiction. Now, the acquisition of any equity, even a single share, can trigger jurisdiction if it is accompanied by certain triggering rights like a board seat, board observer, and others. So really quite a significant expansion in jurisdiction. And with respect to biotech investments, I'd say for large M&A transactions, there's probably been less impact. CFIUS regularly, timely approves the overwhelming majority of investments, especially from allied countries, such as the UK. And for large M&A transactions, there are often other regulatory reviews and processes, including antitrust authorities, so that going through a CFIUS review will add some cost in terms of legal costs and potential filing fees, but it's not likely to really extend the timeline for the approval. Where we have seen more impact are some of the venture transactions, where, as I think James and Eric described, parties are seeking to close quickly, and that might not be subject to other regulatory regimes, and therefore, adding a CFIUS review can slow things down. There are definitely strategies that can be used to try and mitigate that risk, and such as, for example, deferring rights until after a CFIUS review. But I think that's the category of transactions that have been more affected. And then, of course, there certainly has been an impact on investments from countries that are not allies of the United States. countries like China, Russia, and then also from investors, including investors from allied countries who may have, for example, significant shareholders from China or Russia, or significant business ties and other interests. So I think that's where we've seen the greatest impact in the biotech sector.
Right, thank you. So some causes for reassurance there and some causes for concern, I think, as well. It sounds like on the whole, it's worked pretty well and hasn't had too much of an impact on most biotech transactions. So what lessons can the UK learn, both the UK government and UK companies learn from the US experience?
Sure. So, CFIUS's role as a regulator has really evolved and matured over the decades, including as perceived national security risks have changed. And sounds like under the UK regime, national security is not defined for CFIUS purposes, and that's because it evolves. My personal perspective is that the process generally works quite well here in the United States. It's led by national security professionals within the member agencies, career professionals who take the responsibilities, very seriously. And as an American who cares about national security, and having seen some of the transactions that I've seen, I'm very glad that we have CFIUS. My recommendations for other countries that are, adopting these types of procedures are, I guess, first, to ensure that the process reflects not just the views of national security professionals, but also those who really understand business. National security professionals are very good at identifying risks, but not always as good at understanding business and understanding how those risks can be addressed. I also think it's important that the process be as open, transparent, and predictable as possible. That's really what businesses need, and it is a challenge sometimes because of the requirements of national security. But from Sarah's description, it sounds like the UK government is taking this quite seriously and trying to do it in a manner that is open, transparent, and predictable. And from our experience here in the United States, that's when the process works well, because that's when transaction parties can have confidence in the process and not be afraid of it. Lastly, I think it's important that the process have appropriate political oversight, but really be driven by career professionals. We've seen some examples, including in the last 4 years, where it's been more of a top-down process driven in some circumstances by the political levels, rather than a bottom-up process driven by the career professionals. That's more the exception than the rule, but that's an important balance to get right. Lastly, for transaction parties, I think my advice is pretty simple, which is, as James said, for the UK regime, it's the same thing here in the United States. It is absolutely essential to identify potential CFIUS issues as early as possible. The vast majority of issues can be addressed in one fashion or other, whether that's through the transaction agreements, through the transaction structure, through early engagement with the committee. Where we see deals go off the rails and have real problems is where the parties have missed an issue and it's not identified until later on, or it's identified when the government identifies it. And at that point, it can be very challenging or impossible to solve. So my words of advice are to try and identify the issues as early as possible. Deal counsel play a critical role in this process for their clients. It's typically, in our experience, deal counsel or investment bankers who sort of understand the CFIUS issues and can spot them early for their clients, and then bring an experienced CFIUS counsel who can help address and manage the issues early on.
Thank you. Yes, as James says, I think we're going to have to watch how this one unfolds and people get used to it over time. But it's good to know, Sarah, that you're already taking inquiries from companies and investors and helping them get to grips with it during this period. We've had a few questions in about the types of transactions dealt with. So one question is, does this apply to IPOs? And it would, if is my understanding, if a certain number of shares were to be traded. So for other public transactions, how do you view this working on stock markets where trading is pretty quick? And also a lot of biotech companies do go over to NASDAQ and obviously list in America rather than the UK. Is that of interest to the UK government? Does that change anything for them?
If they're a UK company, then yes, they possibly, depending if they fall within the regime, may need to come to us. And I think the way that it will work is for people to come to us early, let us know sort of what's happening, and we'll work with them in each individual case to make sure that it runs smoothly.
Mm. And what about the instantaneous trading that can happen on stock exchanges? How can that be dealt with?
So we have a power to retrospectively validate if needed. So people can come and apply straight after and get that validation straight away.
Mm. And we've had a question if there's if a deal is nullified after being reviewed, is there any form of compensation, or how will that be unwound?
So it will be very much on a case-by-case basis. Generally, you'll be aware under the Enterprise Act, since in the 18 years we've had it, we've never blocked a deal. So we don't expect to suddenly start having to unwind lots of deals or block lots of deals in the first place. And generally, in those cases, government is not usually under the Enterprise Act, we've never paid compensation, for example, but there is a power to do so in exceptional circumstances if it were needed. But again, it would be very much on a case by case and as a last resort. It's really a power of last resort.
Mm. And we've had a question which is actually directed at Jonathan. Does CFIUS also cover investment by US investors or just foreign investors? Because this person believes that UK legislation will cover all investments, not just foreign ones. So perhaps Jonathan and then Sarah could respond to that.
Sure. So the CFIUS is focused on foreign investment in the United States. It can encompass, though, in some cases, businesses in the United States, because the test is whether or not the investor is a foreign person. That's the sort of legal term in the regulations. And a foreign person is not just any foreign person, government, or entity. So, for example, a UK domiciled company. It's also any entity, including a US company, that's under the control of any foreign person, and controls a very broad and flexible test. So, for example, if you have a US publicly traded company, but it has, let's say, a Canadian shareholder that has 21% of the voting shares and 2 board seats, that publicly traded US company is probably viewed by CFIUS as a foreign person because it's under the control of that Canadian shareholder. So there does have to be a foreign interest, but it can encompass in some circumstances US businesses that have even minority foreign shareholders.
Thank you. Sarah?
Yes, the interpretation of our bill is correct that it does indeed cover UK to UK companies. Again, we expect to be able to clear those very quickly, but we felt that it was quite important to include UK to UK simply because we didn't want people trying to circumvent the regime by coming to set up an entity in the UK and then buying it. So it was really to kind of close that option down rather than to penalise genuine UK to UK purchases.
Mm. And the legislation allows the government to provide kind of pre-approval or define what type of investors might receive some kind of pre-approval, a tick against their name so they don't require such strong scrutiny. What are the plans to introduce that straight away or use that later?
No, not to introduce it straight away. We want to see how the regime's working first, getting to grips a bit with how it's working in practice, and getting to know some of the regular investors about who would be best to put on that list in the first place. Things we are working through at the moment, though, is looking at, if there are repeat investors, how we can speed up the process for them. So perhaps by sort of having a pre-completed form where people just need to confirm there's been no changes since the last time they submitted. So we are looking at that. We have taken the exemption powers, but we won't be bringing them in straight away.
Right, good to know. I had a really interesting question here that I hadn't actually, I must admit, I hadn't considered yet. But if you're a company doing contract development for a foreign company, so we have a lot of biotech companies in the UK who do R&D on behalf of other companies. They get paid to do that. Would they have to do anything through this regime? I mean, there's not a actual acquisition of an entity going on. It's contract work, but how would that fall into this?
So the bill is all about acquisition of control. So, you know, if there was just some R&D contract work, then it's highly unlikely that that would fall into place. I guess in the only very exceptional circumstance is if there was some follow-on acquisition of very unique IP, then people might want to notify, but again, there is no requirement for them to do so. You know, as I mentioned, asset sales doesn't fall under the mandatory regime.
Right. James, do you have any reflections on that? I mean, the biotech sector particularly has got some very complicated deals and a lot of IP licensing deals and that type of thing. Do you see it becoming a complicated issue for companies?
Yeah, I think it could be. It could very well become a difficult thing to assess. I think, you know, Sarah made the point that licensing deals can fall within the scope of the regime. So licensing of significant IP could be caught. That's unusual, is my understanding, as compared to other foreign investment type regimes. They won't, though, be subject to the mandatory regime, so that would just be essentially a sort of self-assessment and a question of whether or not there should be a voluntary notification. So I do think it will introduce some complexity in those sorts of deals, and it will just be another thing to add to the list of factors to consider when you're looking at those deals, diligencing those deals, and sort of structuring those deals. And I do think, just to pick up the example that you gave, Martin, of outsourced R&D, I think, as Sarah was saying, you know, if it was just a bare IP right to do the R&D on behalf of the IP owner, and there was nothing that gave control over that, that would seem unlikely to fall within the scope of the regime, and therefore be unlikely to warrant a voluntary notification. I think it's when you sort of go beyond that basic level and there is some, as Sarah said, some acquisition of control, some acquisition of additional rights over the IP, maybe rights to exploit it further or something like that. That's when you would be potentially creeping into the regime and potentially thinking about a voluntary notification.
Thank you. I think I've got time for one more question. Sarah, there's a question on who will be actually reviewing the technology at the heart of the companies within BEIS, and you said the wider government as well. So how are you going to be bringing in the right expertise to assess potential threats?
So simply by sort of creating a bit of a hub and a spoke model across government. So, you know, we have quite a lot of government scientists across the whole of government. We have a lot of national security experts in our security services, and then we have sort of sector experts or sort of sector teams with access to sector experts that we can call in and use their expertise as and when is needed.
Right. And is the government doing anything to work with it, you know, embassies around the world to help communicate this new regime coming in? And we're particularly thinking, as Eric said, we've got a lot of American investors, but also Chinese and others. They're very important for the sector in the UK. What's the government doing to reassure those investors?
So a number of things. I've certainly done a fair few webinars for various embassies, and and also their own staff are talking on a one-to-one basis with trusted investors that we know like to invest in the UK, and we want to encourage them to continue to do that. So, you know, they're very much building those one-to-one relationships and sort of using the scripts to support the conversations on national security.
Thank you. So lots to think about. I'm afraid we do have a lot of questions that we've not been able to answer. We're going to try and answer those in writing after this webinar and put them onto the BIA website. Now, I said I'd do the same poll again to see how you now feel about this after hearing from the government and from our legal experts. So it's the same question again. What impact do you think the NSI regime will have on UK life sciences? If you could vote now, please, answering whether you think it's going to have a negative impact, a positive impact, little or no impact, or you don't know.
And Martin, just to come in here, just a reminder that 3% thought it was going to have a positive impact at the start of the show. 41% said negative impact, 53% said don't know. So we'll see the results shortly.
Yeah, thank you, Eric. I can see we've got 61% voted so far, so I will just give it a few more seconds rather. I'll close in 5, 4, 3, 2, 1. Okay, and I'll share the results. So looks like we've been informative today, which is good. More people have been able to make up their mind. Unfortunately, more people, 61%, now say they think it will have a negative impact. 5% positive, 18% little or no impact, and then 16% don't know. So that's a very interesting result. Obviously, people have various concerns. So I'm going to ask another poll question, which is, what are your main concerns about the new NSI regime? So if you could answer increased cost and red tape for businesses, deals being held up or falling through due to time to get approval. So it's kind of fallen off the end there. Foreign investors being deterred from the UK. Government power has been used to block deals on other grounds. I would remind you, Sarah did say it's only going to be used on national security grounds, but Eric said that some members are concerned that it could be used to keep R&D jobs in the UK or something else. Or you might have other concerns, and if so, please tick that box. So votes coming in here. Looking quite split so far, but I will close it in a couple of seconds. 5, 4, 3, 2, 1. Over 70% have voted, and quite split. So here we have red tape concerns at 28%. Deals being held up or falling through is the most significant concern, it seems, at 39%. Foreign investors being deterred from the UK, 26%. Little concern about the government using it for non-security grounds, and 1% other. So it's a range of views there, I think. So thank you very much for joining us on this webinar. It's been great to have a very large audience, actually. There's clearly been a lot of interest in this. But thank you, Sarah, Eric, Jonathan, and James for joining me on this. We really appreciate you spending the time to talk us through. This webinar is going to be available to watch again on YouTube. As I said, we'll try and answer any questions that we didn't get through to on the BIA website. Please keep a lookout for that. And if you are interested in keeping in touch with the BIA, you can join us, help us do our influencing work. You can connect to members and the wider community through our events, and you can save with business solutions. All very good reasons to be joining the BIA. If you're not already a member, do contact Michael McGivern in our team to talk if you would like to join. We have a few upcoming events. Brexit next week, we have a webinar, 4th of March. Women in Biotech Transatlantic event on the 10th of March, and then our regional event in Glasgow, but not really in Glasgow because it's virtual, on the 24th of March. So thank you very much. It's been fantastic to discuss with Sarah, Jonathan, James and Eric today, and I thank you all for joining, and I hope you have a good day. Goodbye.